In this presentation, we will take a look at the auditing process for auditing accounts payable, focusing in on accrued expenses. Accrued expenses. So here's going to be our assertions that we're focusing in on. Existence being the first assertion. Accounts payable and accrued expenses are valid liabilities. So that's what we're thinking about in terms of existence. Are they valid? Rights and obligations with regard to accrued expenses. Accounts payable and accrued expenses are obligations of the entity, so we want to be able to say that they are for the entity, these accrued expenses. Completeness, the assertion of completeness. All accounts payable and accrued expenses have been recorded. All related disclosures that should have been included in the financial statements have been included. Then we have accuracy, valuation, and allocation as the assertion. Accounts payable and accrued expenses are included in the financial statements at correct amounts. Any valuation or allocation adjustments have been recorded. Related disclosures have been measured and described. Then we have the assertion of classification. All accounts payable and accrued expenses are recorded in the correct account. Then the assertion of presentation. Accounts payable and accrued expenses are correctly aggregated or disaggregated and clearly described. Related disclosures are relevant and understandable. Now we're going to discuss the substantive analytical procedures. So substantive analytical procedures. So we're on the substantive procedures, but these are those analytical ones, the ones that we can do in the office, the comparison, the auditor's office, I would consider, the comparison, the ratio analysis type of activities. So we can compare the payables turnover and days outstanding in accounts payable to the previous years and industry data. The possible misstatement we would detect under or overstatement of liabilities and expenses. The substantive analytical procedure then we can do compare current year balances in accounts payable and accruals with the prior year's balances. Obviously, this will be a common procedure we'll do. We'll compare the current year to the prior year, that what we're going to detect under or over statement of liabilities and expenditures. So any kind of unusual activity from year over year comparison is something we might look into. Then the next substantive analytical procedure, compare amounts owed to individual vendors in the current year's accounts payable listing to amounts owed in prior years. What we might detect under or over statement of liabilities and expenses. Next substantive analytical procedure, compare purchase returns and allowances as a percentage of revenue or cost of sales to prior years and industry data. Possible misstatement to detect under or overstatement of purchase returns. Next substantive analytical procedure, predict accrued interest expense based on loan terms and the outstanding balance. Possible misstatement to detect understatement of accrued interest.